Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at Markouts, we have Andrew Oppenheimer, U.S. Equities Principal Product Manager at Nasdaq, with an update on one of our flagship equities trading products. It's great to have you with me at Markouts, Andrew. Let's review M-ELO. What is that?
Sure. M-ELO or MELO. It's a non-display order type that must wait 1/2 second prior to being eligible to trade. It executes at the midpoint of the MBBO and only against other MELO orders that have waited a 1/2 second. We've been live for just over a year now, and we're really thrilled with the results. We're executing anywhere from 12.5 to 13.5 million shares a day. Orders are resting on average over 12 seconds, and customer feedback has been overwhelmingly positive. And when we look at our own internal analysis, it confirms why we're getting such great feedback.
All right, let's take a look at a couple of those metrics. Let's pull up a chart on quote stability.
Sure. So quote stability is one of those data points that we're using to confirm MELO's success. What it is it's measuring the percentage of time the MBBO remains unchanged after an execution. So if you look at it in terms of MELO, you can see MELO in the blue is higher than all the other venues, off exchange, on exchange. And if you look at it 1 second, it's really around 88 to 90%. And it stayed that way actually throughout the entire year. So it's not only higher than all the other venue types, but also has remained static in that area. So it's telling me that execution impact is minimal when a MELO execution occurs. If you look at it over here in the 1 second quote stability by execution size, the greater the size of the trade, the more that quote remains stable, something we just are really happy with.
All right, now when we take a look at performing venue analysis, one of the key components is taking a look at markouts. Let's look at the following chart.
Sure. So markouts are a key component in doing venue analysis, or in the case of MELO, an order type. And what it is, it's looking at the difference between the executed price and a price at a future time. For example, if I bought stock at $10 and 10 seconds later the stock moved to $9, that would be a negative markout. On the other hand, if it moved higher to $11, that would be a positive markout. So what we have here is two different methodologies of doing markouts. We use an overall markout and a 1 second markout. The overall markout takes a series of time horizons, assigns a weighting to each one of them, and then blends them together to come up with a score. The 1 second markout just looks at the time snapshot 1 second post MELO execution. And what we're really seeing here is this cluster right in the center of the chart where all of the participants are harmonized in terms of performance, right? So here we see on the overall markout, everybody plus or minus within 1/2 basis point. And on the 1 second mark, everybody within 2/10 of a basis point for the most part. Again, so what that's telling me is that performance is harmonized, and that the 1/2 second is the great equalizer in terms of monitoring and measuring performance.
Yeah, you can certainly see it on the chart here. I mean, these clusters are really nice and tight relative to the overall market. It's a difference what 1 second can make in trading.
Exactly. It's exactly what we want to see when we're looking at. We don't want anyone trading to the detriment of another participant in MELO. We want everybody to have a great experience.
All right, now how does this differ from other order types and venues that are available on the market?
Sure. So over the last few years, we have seen the proliferation of venues and order types that have incorporated delay mechanisms. MELO is different in that it's a purpose-built solution. And what I mean by that is that we've provided an answer for like-minded investors to interact with one another, but without further fragmenting the market as we built it on the Nasdaq stock market. It's simple. We don't use any formulas to determine when or when not to trade. We simply incorporate a 1/2 second delay, give the trader or the algo full control of that order, meaning we won't hold up any cancels or modifies. And it's just about adding value without complexity.
All right, to wrap up here, we never stop innovating at Nasdaq, so tell us what's next for MELO.
Yeah, sure. So it's been a great year. Our customers have been great partners. They've integrated the order type. They've seen the value. And where it fell is it naturally fit in dark aggregators and dark strategies. But as customers realize the value of a MELO is that it's expanding its usage into implementation shortfall, TWAP, VWAP, and gray strategies. And so since January, MELO's market share has increased by 55%. And so it's just telling me that MELO is doing exactly what it was designed to do: enhance the trader's experience, maximize the opportunity for a high-quality trade, and minimize adverse selection.
All right, Andrew, thank you so much.
Thank you so much.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.